With peace talks all around, should you sell your Woodside and Santos share? Is Paul Rickard sorry he bought Zip last week? And the Fed, what will they do with interest rates? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, I feel a bit like a genius with Woodside. I bought in at 18, it's now 30 odd. We're thinking about selling today and taking the profit. We might be sorry if war breaks out again worse, but what do you think?
Look, I think it's in profit zone, Peter. I mean, I'm a long-standing Woodside shareholder that's seen it, has bought us high in the 40s, right? That was a couple of decades ago, and bought it at the $18 not so long ago. When it gets to $30, I reckon it's sort of profit area, Pete, because look, Woodside, it's doing some good things, but it's always been a bit of a gunner company. We're going to get the demerger later in the year, which should be good, but we're going to see a lot more Woodside shares on the marketplace come the end of June. I think you get a chance to buy below 30 again, and I think oil prices, you know, they got out of hand, Peter. They'll come down, they'll go back up. I reckon it's in profit territory.
And to me, oil stocks like Woodside and Santos are nearly becoming trading stocks because long-term ESG concerns will kill these companies, but in the short term, we need them, as this war has proven. You know, all these old fossil fuels and the coal miners have all done well, but there's going to be a time when it turns, Paul, isn't it?
It is, and I think that's the problem with those companies. So look, some core portfolio stocks, but occasionally you've got to take a bit of profit. I think this is sort of profit territory. I reckon you'll get a chance to buy it back at lower down. Okay,
let's go to Zip. Now, you weren't in Zip. I was in Zip.
Oh, these tech stocks, Pete.
No, it's bad for the hairline, isn't it? But you actually wrote, you thought it was time to buy Zip. What price was that?
Well, I wrote it at about $1.90, and that's where I bought, and it's now $1.40, Pete. And I thought $1.90 after it got to about $10 looked like pretty good value. I thought the Sezzle acquisition was pretty good.
Plus,
right? And particularly as it was an all-scrip acquisition, and they raising capital. So and that sort of strengthens the balance sheet, which they need to do. Now it's $1.40. Our payments come, you know, pay now, buy now, pay later companies. When you're out of favour, you're out of favour. It's got to be a buy now, but maybe that analyst at UBS who set a target price of $1, and you might recall, Pete, in the story is there was such divergence amongst analysts in terms of target prices. One was saying $1, another was saying $5. You know, huge difference, and maybe the UBS guy will finally be right.
Yeah, he's had a lot of mistakes on Afterpay.
He's had a lot of mistakes. He called Afterpay to sell at 27 and went to 140, right? But he stayed with his sell call and his target. But
well, anyway. one thing I will say, Paul, and I noted only last week that PayPal, which is one of the biggest and best payments companies in the world, it was a $300 stock and got down to about 100. So that's a massive fall. But I do not believe payments companies will be banned forever, because at the very worst, Zip would have to be a takeover target.
Yeah, and I think that you're going to see that, people. Look, at some stage, you've already seen a bit of reversal in the US stocks. Hasn't really flowed through in the Australian market. The market ultimately will take its lead from what's going on with PayPal, what's going on with Block, you know, Adyen, other companies, they're the companies, and Spotify, it'll take its lead from those companies, and that's really what you need to follow in Australia.
It's a case of no guts, no glory. If you're buying now, I reckon they're eventually going to go up because they've got lots of customers, and I got to say, I might even buy more Zip, but that's me talking through courage rather than good sense. Let's go to the final story. The Fed, we're expecting the interest rate rise this week. What's going to happen going forward?
Okay, so 0.25%, that's locked in. What people will be looking at will be, first of all, the dot plot. That's where all the members of the Federal Open Market Committee...
They're all like state governors of Reserve Banks.
Yeah, there's about 14, I think there are. Maybe it's 16, don't quote me. But they actually give their expectations about interest rates over the next 3 years.
It's their guess.
And so there's a dot. So they don't tell you who it is, but they actually, you can see what they're expecting interest rates to do, and so that gives you an idea what their thinking is. Hasn't proved to be a great guide long term, but the market takes a lot of notice of it. And the other thing the market will be looking at is you'll get some updated, same sort of thing from the same 14 people on the committee, their expectations around inflation and growth. So it's not about the interest rate decision. That's already locked in. Everyone knows it's going to be 0.25%. It'll be just their expectations. And so what the market's going to be taking from this is what does the Fed really think is going to happen to inflation, and how much might interest rates need to rise down the track. That's what the market will be looking at tomorrow.
And out there, Paul, you've got a lot of economists thinking 5, a fair number saying 7, and some even say 10 interest rate rises in a row, which would be unbelievable. what these people are suggesting, if the average is like 5 rises, they'll have a big impact on negativity or positivity when it comes to consumers and business.
And a lot priced in. The 2-year bond rate is now up to, in the US is up to 1.7%.
Yeah.
The 10-year 2.15. So we're going up. There's a lot of interest rate increases built into the market. So look, the risk here, I think, is to go the other way. The Fed's not as aggressive, and whatever it sees, this maybe the inflation is being a little more transitory. Maybe it's a bit cautious because of what's going on in Ukraine. Yeah. Maybe it now realises commodity prices have had their spike. China's sort of, maybe COVID's breaking out there in China. Who knows?
Growing better than expected, but the COVID problem's coming back. So I reckon they're going to hesitate, Paul. And I don't reckon we'll see any more than 5 interest rate rises this year from the Fed, and I hope that's the case. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.